Hello everyone, and just wanted to make this video. This is a snapshot of the Dax Open. I had an issue trying to log in to our webinar this morning, so I'm recording this a little later in the morning. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM, and here's my email address. And of course, today is Wednesday, and it's the 22nd of December. Just going to bring up the disclaimer. So we've got the high risk investment warning. I'm just going to keep this on screen for a few moments. And I'll just bring up our market commentaries disclaimer. And then just finally our references. So just as per our webinar, we'll do the analysis on market scope, and we'll go through the CNBC European morning note just to know what headlines we need to be aware of. And here's CNBC. So the headline reads, European markets muted as investors monitor Omicron risk. And okay, so European markets were little changed on Wednesday as investors continue to monitor the threat posed by the Omicron COVID-19 variant. Asia Pacific region was modestly higher on Wednesday, while US stock futures were muted in pre-market trade, and that's following a 500-point rebound on the Dow yesterday. Global markets have been volatile, and European shares rebounded 1.4% on Tuesday to retrace much of the loss accrued during a sharp sell-off in the previous session. Investors juggling the rapid spread of the Omicron variant and the introduction of containment measures by governments around the world. Okay, so here it says AstraZeneca has become the latest company to announce that it had begun work alongside Oxford University on a Omicron-specific vaccine. Moderna has announced that a third dose of its vaccine appears to provide significant protection. German Chancellor Olaf Scholz said Tuesday that new restrictions will be introduced before New Year's Eve, and that's going to limit private gatherings to a maximum of 10. Britain pledged £1 billion to businesses hit by the new COVID-19 variant, with the country's hospitality sector and others once again under strain. On the data front, UK GDP grew 1.1% in the third quarter. Final readings confirmed this morning, and that's slightly below the 1.3% consensus. We'll also get US GDP later. I wonder if that is here. I don't see it. All right. All right, let's move on to the chart and do some analysis there. So we'll start off with our weekly chart, and the weekly chart is not trending. A trend is defined by peaks and troughs, and I don't see the necessary peaks and troughs as per the classical definition to suggest we trending, but we do have a bullish reference candle here, and that helps in serving as a platform to get swings going. Now, the swing clearly hasn't started, but it does look as if this may be the next swing low, the next reference candle, and we'll only know that at the end of next week because this is the weekly chart, but could be sort of something like this. Let me label it. So we've got a reference trough. I'll put in the reference peak. Assuming this is the swing low, this would be a higher trough, and then we would obviously look to see if we get the higher peak, and that would suggest some bullishness. Let's just take a look at the daily chart. I want to just change this to daily. All right, so On the daily chart, we have moved into the neutral area, what we call zone 2. That's between the two blue bands. And again, let's just draw attention to the fact that this is a potential swing low. Okay, so we've got the lowest low in at least 3 candles. Yesterday's price action had follow through, so we've got the confirmation of the swing low. And that's what's needed for a swing. It doesn't guarantee the swing, okay, but the fact that it's there increases the probability of a swing. And today's price action is quite muted. It looks like a very short candle at the moment, so not a lot of emotional trading. Perhaps a little bit of indecisiveness coming in. And if we go down to our hourly, so what we want to see is, let's bring in an arrow here. So we'll just keep an eye on the stochastic, right? So if the stochastic maintains this upper level, that will suggest bullishness. If it drops, so it's already started to slip, but if it drops further towards 20, well, then there is a danger, of course, that the momentum's turning bearish. But at the moment, it is on the bullish side of the oscillator. We are at the central pivot, and that central pivot may provide support. So we just want to monitor this level here. And of course, the way that we're going to do that is we'll watch for the EMA triggers. So is that going to cross positively? And is our stochastic going to cross positively? And if it does, then we need to see the stochastic sticking in its upper quintile. And that would suggest that there is a bullish momentum that's underlying. Needless to say, any trades need to be accompanied with a stop loss and money management, so please keep that in mind. And thank you very much for watching, and we'll get the webinar up and running again tomorrow. Thank you very much.